Uh, hey guys, am I audible? Let me quickly check on my YouTube account as well. Uh, hey guys, am I audible? Let me quickly check. Okay, let us wait for a bit before we begin our stream. So today we are gonna talk about an AI data center stock, which is Terawulf. So we have been long this stock since August of 2025. So as you guys can see here, Terawulf is like a Bitcoin miner, and they pivoted to AI data center. Mining Bitcoin was a really unprofitable business, and it was a pain in the neck for all the AI data center stocks. So we are up 136% and even more, and because we have been in and out of this stock a lot. Um, so I have sold some debit spreads in this stock, and I have been trading this stock since August of 2025 when I heard about the Google AI data center deal with Terawulf, and we have been bullish, as you can see on our Twitter or X timeline. Investment thesis: Terawulf from Bitcoin miner to AI infrastructure powerhouse. Here I broke the deal step by step, which was a $3.7 billion Google backed deal. Google also owns 14% of Terawulf, which is like a big stake. And this was initially um, created as like Google owned 7.5 or 8% initially, and then later after a few months they added even more. So yeah, uh, they are gonna be gross profitable, I think, in quarter 3 or quarter 4 of 2026. And yeah, their moat is clean energy. So they are located near Lake Mariner, New York, and this used to be a coal power plant, which they transformed it. So let's briefly look over the history of Terawolf.
Today, we're jumping into a really interesting one, Terawulf. This is a company with, well, two completely different stories fighting for the spotlight. You've got this high tech AI future on one hand and a ghost story from the age of coal on the other. So, we're going to unpack both. So, on one side, you've got the AI dream, right? We're talking a multi billion-dollar partnership with Google, a pivot into high performance computing. Sounds amazing. But then, on the other side, you have this legacy of distressed debt from failing coal plants, a company kept alive by state subsidies, and this really complex transfer of value that frankly needs some explaining. These are the two competing narratives we're going to break down today.
Okay, so let's dive into that first story, the one about the AI powerhouse. Today, TerraWolf presents itself as a company right at the forefront of the AI revolution.
So I have made this video 4 months ago.
It started out as a Bitcoin miner, but now it's transforming and fast into a data center operator for what's called high performance computing, or HPC. Now, what's really interesting here is that even though Bitcoin mining is still, the vast majority of their revenue, a whopping 86%, the company is clearly at a turning point. That little 14% slice for HPC leases, that's the future they are betting everything on. It's kind of like when Netflix pivoted from mailing you DVDs to streaming. It's a huge deal.
And this pivot, it's been happening incredibly fast. I mean, this quote really nails it. The Terawulf of today is almost unrecognizable from the company it was just a year ago. That's a dramatic transformation, and it's got the market paying very, very close attention. Okay, so let's talk about the absolute centerpiece of this new AI story, the partnership with Google. And listen, this isn't just some casual handshake agreement. No way. This is a sophisticated, multi-billion-dollar deal that basically validates TeraWulf's entire strategy. So here's how the deal is structured. It's basically got three parts. First, you have TeraWulf. They own the physical stuff, the land, the buildings, the infrastructure. Then you have a company called FluidStack. They come in as the official tenant and operator. But the real key here is step three, Google. They are the ultimate end user, and, this is crucial, the financial backstop for the whole shebang. And if
The latest update is like now Anthropic is also renting Fluid Stack compute, and now whenever someone in the world uses Claude, so some part of the revenue might flow into TeraWulf through this structure. And another thing is like the GPU depreciation cost, which was a major issue highlighted by Michael Burry, who was a pioneer in the Big Short. He like made billions of dollars and shorting the stock market that time. So he highlighted this issue a lot last year, that all the AI data centers would be collapsing just because the GPUs depreciate faster a lot, and this is gonna cause a debt spiral and an endless debt spiral, because they were not the GPU depreciation costs are gonna accelerate a lot, and these companies will never make a profit. So this thing is not to be seen in TeraWulf because they don't own any GPUs. They ask FluidStack to come with their own GPUs. They are just an AI data center landlord, which has like 80 to 85% gross margins. So it's a high margin business, and you might be asking that why TeraWulf is getting such a premium, because their stock, as you can see, is almost it is almost up 121% year to date, and within a 1 year time frame it is up 472%. And I joined the bandwagon around $8 to $9 around August of 2025, and I have been riding this bandwagon since. And I have a decently sized position. I mean, I had a lot in TeraWulf, but I took a lot of profits earlier. So yeah, let's see. Yeah, this is one post which I highlighted, that the short interest went from 14% to 30%. So it was, I guess, the debt holders which were shorting it at the same time. But I mean, the shorts are unwinding now. Let us quickly see the short interest as of now. Okay, it has been flat, almost flat, 28%. So yeah, it is it has plateaued. Um, so they are also unwinding a lot of Bitcoin mining equipment, and they are completely shifting to AI data centers, and it's a capital intensive business as of now, so that is why their net income and operating income is negative, but their revenue is growing fast. Or their future expected revenue is gonna go fast because um, they only have to beat some millions of dollars, like $34 million, 35, 50, and they have got billions of dollars of backlogs, which will help them beat this. And so I even fought with big YouTubers who were calling Terawulf a fraud. That the CEO paid himself for $234 million for the land he controlled. In 2025, he spent 445 million to build 22.5 megawatt of capacity. That's what the 3x the cost of high performance computing. So where is the 300 million going? Um, so he highlighted that the CEO has taken the money for himself, but I actually debunked this claim and I said there was a wealth transfer, but it is not a Ponzi scheme. It's a textbook private equity distressed asset turnaround. So what it means is, like, in 2016, Paul Prager, he bought this power plant, and coal power plants come with a lot of hidden liabilities because these power plants destroy the environment, and these power plants have some costs underwritten with them. So Prager actually caught a falling knife. So this is the um, classic um, reversal, or let us say that there is a famous quote by Warren Buffett: "Be greedy when others are fearful, and be fearful when others are greedy." So this is what you see here, that became greedy when others were fearful, and he bought a distressed coal power plant, and then he had to pay a lot of debt, and that is why he had to take that money out, and he had to clear out all these obligations that he had. And for years, Prager serviced this high interest private debt on dead assets. The prepaid rent, 98 million for Cuyahoga and lease resets, 100 million for Somerset, matched the capital required to retire the legacy private debt and recoup his 8-year carry cost. So he had waited for this moment for 8 years, and finally, this moment came when Google and a lot of AI players needed a lot of compute. And the good thing about these Bitcoin miners was that they had a lot of ready available compute. And so in a Bitcoin data center, you have like the power shells and substations and all those equipments which are scarce right now. And if you decide to build a AI data center right now, the backlog is going to be 2 years or 3 years or somewhat that time. But these Bitcoin miners had AI, they had these power shells enabled, and they have compute ready to be deployed really fast. So that is why, like, these AI data centers, Bitcoin miners turned AI data centers players, they got a lot of bid. And Prager turned a dying coal plant with 135 million in debt into a solvent Google-backed AI campus, and he used retail liquidity to save his private heist. Yeah, it's right, but It's not a fake operation, it's like backed by Google. And they also have 100% zero carbon power in a world where Google must hit net zero scope by 2030. They are not doing Wolf a favor. They literally need these exact clean energy megawatt hours, or they miss their own ESG targets. So yeah, and even Apple is using Gemini. So Google needs a lot of compute, and FluidStack needs to be deployed for this compute. So Terawulf is gonna play a big role in this, and I fought with big YouTubers over my thesis, and I had conviction. So I have been holding this stock since 1 year, and yeah, you can see by my past coverage about Terawulf. So yeah, we had some shares around 9.9, and we had some naked calls as well, which we sold for really good profit. So even though my um, entry was good, and I trimmed my position, I am long this stock still, and I'm not. I have some covered calls which I will roll when that date arrives, and it's a high capital intensive business, so it's gonna take some time to um, show on the balance sheet, but I think they are gonna be profitable in like 2027.
End user, and, this is crucial, the financial backstop for the whole shebang. And if you want cold, hard proof of a direct relationship between them, look no further. 41,011,803. That's the exact number of stock warrants, basically the right to buy shares in the future, that Terawulf granted directly to Google LLC. This isn't some indirect deal through a third party. It's a binding financial relationship right there in the public filing. So what exactly is this backstop we keep talking about? Well, think of it as a super powerful financial guarantee. It basically means that if FluidStack ever fails to pay its rent, Google has to step in and cover it. This guarantee effectively wraps Terawulf's debt in Google's own amazing investment-grade credit rating. And that is the key that unlocks billions in low-cost financing for their big expansion plan. So that all sounds pretty incredible, right? A fantastic, forward-looking tech story. But to really get what's going on here, we have to ask a critical question. Where did these massive, power-hungry data center sites actually come from? The answer? Well, it takes us to a very, very different place. And this brings us to story number 2, the ghost of a coal plant. See, before Terawulf, there was a company called Heorot Power, and what they owned were these aging, unprofitable coal plants in New York. The valuable assets of today, they were the distressed liabilities of yesterday. This timeline really shows you the immense pressure they were under. Back in 2016, the company takes on this massive high-interest loan just to stay afloat. A year later, the coal market completely collapses. By 2019, big institutional investors like Blackstone, they'd walked away, leaving the founder, Paul Prager, in full control of a really troubled company. And then in 2021, the big pivot to a data hub begins. And this chart, this gets right to the heart of the problem. You see, the cost to produce a megawatt hour of electricity at these coal plants was way higher than the price they could sell it for. They were literally losing money with every ton of coal they burned, which made it pretty much impossible to pay back their debt through normal operations. So, that brings us to the obvious question, right? If the plants weren't making any money, how on earth did they manage to pay a debt bill of nearly $17 million every single year? Well, the answer wasn't in the market. It was in some, let's say, very clever financial maneuvering. Hero Power basically survived using 2 main tools. First, they got these state-mandated subsidies by arguing the plants were essential for grid reliability. And second, they launched some really aggressive tax litigation against the local town, and they won, successfully slashing their property assessment from $160 million all the way down to just $20 million. Okay, now look at this table. The annual payment they owed to their private lender was about $16.8 million, and the annual savings they got from that property tax lawsuit, about $16.4 million. I mean, the numbers are almost identical. It's pretty incredible. And here it is, the key takeaway, summed up perfectly by this forensic report we're looking at. The money saved from the local town's tax base was almost exactly what was needed to pay the high-interest private lenders. You see what happened? It was a direct transfer of wealth from the public sector to private creditors. So that brings us to the final piece of this whole puzzle, the creation of Terawulf, a publicly traded company. This move became the mechanism to finally resolve that massive legacy debt from the coal era. They effectively turned that old bad debt into new public equity. This table really shows how it all worked. You can see that over several transactions, the new public company, Terawulf, transferred over $150 million in cash and stock to the private entities controlled by its founder. And that money provided the capital to finally pay off those old distressed lenders from the coal plant days. So, there you have it. We've unpacked both sides. A futuristic AI powerhouse on one hand, and a super complex resolution of a failed coal business on the other. Now let's bring them together and figure out what this all means for the company today. This slide lays out the two competing ways to look at TerraWolf perfectly. Is it the bull case, a pure play on AI growth with the stamp of approval from Google? Or is it the forensic case, the final chapter in a long, complicated story about resolving distressed debt from a bygone industrial era? But here's the thing, and this is the crucial point. Both of these stories are true. They aren't mutually exclusive. The exciting high-tech AI future is being built directly on top of the assets, the infrastructure, and the financial resolution of a very, very complicated coal-powered past. One literally couldn't exist without the other.
And so that leaves us with the big final question, doesn't it? Do you see Terawulf as this brilliant act of industrial reinvention, turning a dying asset into a vital piece of our future infrastructure? Or is it fundamentally a masterful piece of financial engineering designed to resolve a really difficult legacy? The answer, most likely, is that it's both.
Yeah, so Terawulf is like terrific in this sense that they had this readily available compute and power, which they leased out to Fluidstack and Google, Anthropic, all these big players. So yeah, another bull case for TeraWulf is that Alphabet is raising $80 billion with Berkshire. So Alphabet has diluted their stock, and that's a massive green light for AI power infrastructure. And due to this, Google's 50 billion global compute capex spree, TeraWulf is gonna turn out as clear winner because Google has warrants for owning TeraWulf, and I think they own 14%. So they will also benefit with this direct flywheel to award hosting contracts and pull equity gains back into net income. So Google, when they lease out to Fluidstack and TeraWolf, um, they will be realizing that revenue back as net income later. And then Cipher Mining is another close one, uh, which has contracts with AWS as well as Google and Anthropic as well. So I am long TeraWolf. And they are also getting a lot of price target increases by a lot of analysts. They also have a lot of debt, but with dilution, Terawulf has covered a lot of their obligations. So yeah, that's basically it about Terawulf, and I mean they are gonna dilute a lot in future as well because it's a capital intensive business, so I'm not adding it aggressively over here. But if I see it falls below a certain price, like maybe let's say, let us look at their its technical analysis as well. And it has, so it opened, it has breached it Friday's highs. Let's see, daily time frame. Okay, so this is a remarkable show of strength. So on Friday, June 5th, it opened here on the highs, and then it closed over here around 23 or 24. But on Monday, you see that it opened here, and it opened up here, then it went down, and then it went back up, then it closed over here around 26 25.86. So it shows that Terawulf is showing remarkable strength. The volume weighted average price is also 25.46. So it has closed above that, and this is the daily time frame. Let us also look at another technical indicator called Keltner channel. So it has consistently traded over the middle band for a lot of time, and yeah, this stock is showing remarkable strength. I'll wait for it to touch this middle channel of weekly time frame, like around 18 bucks, 19 bucks. Maybe I'll set an alert for 20 bucks, and I'll sell cash secured puts here to enter it once again. And one more entry point which I might look is, yeah, I think it's making higher highs and higher lows, so it would be probably difficult to find it around 20, but let's see. We'll sell some cash secured puts when on a day of fear to get it. And you can also see this on balance volume is also increasing a lot, which is another bullish sign along with the price increase. And the volume is also pretty high, it has been high. So yeah, that's pretty much it about Terawulf. That's it for me, guys. Let me know if you have any questions in the comments below. I will be glad to help you out. Thank you.